Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended mixed on region-specific developments. Major US equity indices posted gains for the sixth straight week, boosted by better than expected US retail sales and strong corporate earnings reported by major banks and a tech major. Asian equities trended mixed, dragged down by China and Hong Kong, both falling around 3% after the follow-up stimulus measures underwhelmed investors, while key gauges of inflation and industrial activity pointed to a continued weakness in economic activity. However, other markets like Indonesia and Taiwan posted strong weekly gains, rising over 3%, supported by foreign investor inflows. Back home, Indian equities declined for the third consecutive week. The Nifty index started on a weak note and remained under pressure from continued foreign investor outflows, uncertainty on the US Fed rate cuts, and mixed start to the earnings season. Broader markets' performance was mixed as the Nifty mid-cap was down around 1%, while the Nifty small-cap index rose 0.4%. Among sectors, financials were the only sector to post gains, while FMCG, metals, and autos lagged, falling over 2% for the past week. The Indian fixed income market had another volatile week. Indian government bond yields rose across the curve, driven by rising US bond yields and domestic consumer price inflation surging to a 9-month high above the RBI's medium-term target. 10-year Indian government bond yield rose 2 basis points to close at 6.81%, while the 3-year and 5-year government bond yields rose by 3 basis points and 2 basis points respectively. The INR closed flat against the USD at 84.07 per dollar as the impact of rising US bond yields, strengthening US dollar, and foreign investor outflows were negated by a sharp decline in crude oil prices and RBI intervention. INR gold rose 0.8%. Brent crude oil fell 7.5% for the week to close at $70 per barrel, recording its biggest weekly decline since September, after data showed China's economic growth slowed and investors digested a mixed outlook on Middle East tension. Coming to macro updates for the week, the first was on India's consumer price inflation, which rose to 5.49% in September of 2024, above the 3.6.5% rise recorded in the previous month and consensus estimate of 5%. This was also the highest inflation rate recorded since the start of 2024, driven primarily by food article prices amid soaring price increases for vegetables and pulses. Prices also accelerated for housing and fell at a slower pace for fuel and light. On a sequential basis, the CPI rose 0.6% month-on-month. The second update was on India's merchandise trade deficit, which moderated to USD 20.8 billion in September of 2024, the lowest since April and below market expectations of USD 25 billion. Imports grew 1.6% year-on-year to USD 55.4 billion, also the lowest since April, as coal imports declined sharply from its high in August, while oil imports increased. In the meantime, exports grew 0.5% year-on-year to USD 34.6 billion, as a robust growth in non-oil exports was partially offset by a contraction in oil exports. Services trade surplus rose to USD 14.3 billion in September compared to 13.9 billion in the previous month and continues to provide cushion to the current account deficit. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.